Let me know if you can see my screen and you can see the stock forward. Thank you. You already know. Pelosi in the building. Give me a sec while I'm eating though. I'm just eating some cookies before we start. Give me like about 1 more minute. Gotta eat the good cookies, the chocolate chip. All right. Fish fillet in the building. Quest Marley, I see you. Even Yasmin came through today. All right. First and foremost, before we start, I know this is a session which I'm going to answer questions, but if you've got more questions, just throw them out. I don't care what kind of questions you got, throw them out. I'm gonna answer it at some point. And if you want to type in the chat, go for it. If you want to type it, not if you want to type it, if you want to unmute, go for it. I don't care. Either way, this is a session for you guys. This is a session where I answer your questions. So first and foremost, I'm gonna go scroll back to the chat from earlier because I know a few of you had some questions in there, and let me see what's up. We'll start with that. But before we get into that, first one I want to answer is averaging down. Okay, so let's say I do a call out. Let's just pick a random stock. All right, AMD is here. All right. Okay. Also, this could be getting ready to blow, but either way, that's not the point. So I'm taking the swing trade on AMD. Right. This is a hypothetical. Please don't say, what are you in for AMD? I'm not in AMD. Hypothetical. I'm taking a swing trade and I want to swing it to 147. Okay. I get into AMD contracts. I pay $80 per contract. Okay. This is a swing I want to swing for maybe 4, 5, 6 days, 7 days, maybe a couple weeks. So I buy it for $80. Right? Tomorrow, the price of the contracts drops to $70. I buy contracts for $70. So let's say I bought two at 80, two at 70. My average cost is now 75. It is the total number, so it will be 80 times 2, 160, plus 75 times 2, 150 added together, divided by 2. That's what it will be. So, for an easier example, if I buy 5 contracts at, let's say, 90 and 5 contracts at 70, the middle ground between those is 80. So my average cost will be 80. The reason we do this is because if the contracts go back up to 90, I'm no longer at a break even of 0. I'm now up. Because, again, we averaged down. So we bought more while it was lower, so that when it comes back up, we're making profit at a price where beforehand would have been just breaking even. Yes, it does. You can't if you're buying different contracts, you're not averaging down. You have to buy the exact same strike price to average down. Otherwise, you're just in two different roles. Yeah, exactly. Yeah, great question though. Thank you so much. All right, so I'm back in the chat now. I'm looking through everything we talked about earlier. Okay. So, what do you look for when choosing a call for the small account challenge? Same thing I look for in everything. I look for a stock which has great swing trade potential. Let's pull up the notorious CLSK clean spot because it's from last week, right? So, this is the problem with some of these plays. I'm going to zoom in real time here. So, clean spot, okay? This stock was doing its thing, right? Holding above the moving averages. It broke out. I think we got in this day, Monday. It broke out. It went above my resistance line. It looked good, right? Above the moving averages, looking good. Obviously, the next day, what happened? It gaps down. Cool. Why did I hold? What was I looking for in this workout challenge? First, when I got it here on Monday, I was looking for continuation to keep going, right? It didn't happen. It fell. But why did I still hold to say continue holding? Because look, it was still holding above the moving averages. It was still running with crypto all running. Remember, Bitcoin was running, Ethereum, all them was running. It was still running. So I didn't really care that it dropped down. I knew that unless it breaks below my moving averages, both moving averages, or unless it falls below my level of support, I'm not selling it. Lo and behold, we went from, I think, 13 flat, 13 flat, back up to 1538 was my price target. So we went near there. That was it for small account challenge. That's what I look for. Now, in terms of strike price, sorry, not strike price, in terms of premium we pay, this is the thing. This setup was nice. There might be another setup which is nice. Let's say, I think PayPal has a nice setup right now. Yeah, PayPal has a relatively nice setup. PayPal has a good setup, but let's say the contracts are 200 per piece for something which is $1 out of the money or $2 out of the money. I'm not going to take it because why? Small account challenge don't need that. Let's talk about, I think Target was a good example. Oh, no, you know what? I think QLD is a good example. Yeah, this is a great example. So QLD, I took for the big accounts. But listen, with this one, the price of the contracts are $300. So even though it's a great chart, it's nicely steadily uptrending. I'm not going to call this out a small account challenge because I'm not going to make you put your whole portfolio in one play. Some people in the small account challenge only got $250, $300. Yeah, people have flipped it to crazy amounts, but we're not going to dump a whole portfolio in a play. So I'm trying to find you guys the cheaper plays. For example, the QQQ scalps from today, that were $55, or a swing like Target, which is a cheaper, $80, $90, $110 contracts, or anything like like an Uber, which again, great setups, but the contracts are only costing between 100 and 150, maybe even less than 100. What's the other the stock that we've been slapping? Oh, Affirm. All right, Affirm. If we scroll back, a few days, right? We traded Affirm last week. It pulled back to the moving average. Great, a nice entry, and the contracts were cheap. If we went $1-2 out of money. Great. That's all I need. So the small account challenge isn't based purely off the setup. That's just my trading style. The small account challenge is based on how much the contracts are going for. The strike prices, the strike price is $1, $2 out of the money. How much the premiums are to get those strike prices. That's what I'm looking for when I'm choosing the course for the small account challenge. So again, you guys remember the Affirm, the very first Affirm we took, tested the line of resistance, sold off, and then you remember on the Friday we bought in and we traded it over the following week. We got a resistance line here. We failed to break that resistance. We pulled back to moving average. We started uptrending again, and I was confident that we would at least test the line of resistance again, or at least break above, which is what we did. So that's all I look for the small account challenge. It's more about the setup and then seeing how much the contracts cost. I think you should explain Greeks. Can't be out here buying $7 contracts with Delta and Theta battling it out. Be so far out of money. I could explain Greeks, but the thing with Greeks is sometimes you need a whole session for Greeks. I've explained it in a nutshell a couple times, but I don't know if you were at that session when I explained it. But I can still briefly explain it now. I don't want to get too deep into it, but I can explain it. All right. So everyone knows, well, actually not even everyone. The main Greeks are Delta, Gamma, Theta, and Vega. Okay. So what do Greeks do? What are Greeks? Well, Greeks are on option contracts. Okay. Greeks are not on regular stocks. They're on the option contracts. So those are the four main Greeks. You also have Rho, but that's not really relevant. That's to do with bonds. But anyway, so Delta, your prime Delta is a value between 0 and 1. Delta is going to tell you how much the premium is going to change, and that's based on what the stock price does, if that makes sense. So Delta would tell you that your contract is going to go, up by 65 cents if the stock goes up $1 or whatever like that. You'll be able to calculate how much your option contract goes up based off the price of the movement of the price of the stock. So that's kind of Delta. It's just measuring the change of your option contracts. Then we have Delta Gamma. Gamma measures the rate of Delta. So Gamma is not really relevant, to be honest, But Gamma, if you look at Gamma properly, you can also kind of know what the expected price movement is in a specific stock. Then we have Vega. Vega is actually really important. Vega is gonna tell you let's call it the amount of change, but let's call it the risk of change in implied volatility. Implied volatility needs to increase when you get in a stock. So again, if you're looking at the Vega, it's just going to tell you how much the implied volatility may move based on how the stock price moves. Okay, and then you got Theta. Theta is probably Theta and Delta probably the two most important. Theta measures time decay. Every single option contract decays. Options are exponential, so over a period of time they decay. What does that mean? The closer to expiry you are, the more your contract is going to decay. The more your contract is going to drop based on Theta. So if everything stays the same, even if your stock price is steadily uptrending, your Theta is going to kill your contract because that's just what options contracts have. They have an expiry date, and doesn't matter what goes on. You can have the nicest in the money contract ever. It's still going to have some Theta. Theta is a negative value. Theta only works for you when you're writing options. That means selling options. If you're buying options, you're buying a call, you're buying a put, you're buying any kind of option, Theta is going to be working against you. And again, if you're selling options, which I sometimes do, then Theta works for you because it decays, the buyer's option contracts. So that's the Greeks in a nutshell. As I always say, you need to know the Greeks if you're going to trade options. I go into it for about 45, 55 minutes in the option pack. So if you want to get the option pack and just learn about the Greeks there, you can check it out. I've got 3 videos there. One is for implied volatility, Vega. One is for Theta, time decay. And then the other one explains how to use all the Greeks together. And it also talks about Rho, which is, again, to do with bonds, interest rates, that kind of stuff. Hope that kind of answered your question in a nutshell. But again, I don't want to go too much into the Greeks because I could spend, again, an hour talking specifically about the Greeks. What the next questions are. But yeah, don't buy some stupid contracts out of the money if it's expiring soon, because Theta is going to work against you and rip up your contracts. More specifically, why do they matter in relation to the contracts we choose? I kind of touched on that. You should join blah 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 uncensored on Twitter. Okay. All right, cool. I think I've answered all the questions from earlier. No, hold on. Another question for tonight. Where are good places to find tickers to go further due diligence on trade? Man, Yahoo Finance. This is the best place. Yeah, this is the best place to find information. This is my favorite tool from the start. So this is a place where you want to go to find good tickers, to find due diligence for trade ideas. Let me show you. Someone give me a stock. Unmute yourself. Give me a stock. Any stock in the world. I don't care. I'm gonna find some stuff for you right now. Yeah, great. Let's talk about CLSK CleanSpark. All right. So you got key events on. You can see the monthly chart, how it's panned out over the month. This isn't where I look at my charts, but this is where you can see the charts. All right. Here we go. You get news about it. Bitcoin miner iron sees blah blah blah. Bitcoin rebounds above 96K. That's 5 days ago. You see, 2 months ago, it was a high growth tech stock to watch in September. You want to see press releases? They've got some press releases from 4 months ago, not relevant right now. Going back to the news, again, Bitcoin bolts to record high on blah, blah, blah sweep. Again, analysts eye 100K. When I read that, so this is how I would, I would process the news. So when I read that, again, this is from 24 days ago. When I would have read that 24 days ago, right, Bitcoin was nowhere near 100K. I would have been like, Bitcoin could start moving towards 100K. Bitcoin 24 days ago was probably around 80K, maybe even a bit less. But I see that and I might think, well, I know CleanSpark moves based off Bitcoin. Let me look at some calls. Let me look at getting some shares. Again, every single bit of news you need is on here. The year-to-date return, so that means since January, the 1-year return, the 3-year return, the 5-year return. This is where I kind of find my information in regards to what to expect from a stock, maybe more long-term than directly right now. But as well, it's also got the news. It's also got the recent news, right? So again, if you want to find a platform to find all this, I use Yahoo Finance. You can also use CNBC. You can also use Bloomberg, CNN, no, CNBC, Bloomberg, Yahoo Finance. There's another one, Green Market Watch. That's a green and black website. Yeah, Market Watch. So many different stocks, on here, and it's got information about all of them, right? It will tell you tell you a bit more about the company, about the employees, about when the fiscal year ends, all that kind of stuff. It's all important because even when a fiscal year ends, that can be when a company starts to announce layoffs. A company starts to forecast their revenue for the following fiscal year. All that kind of stuff is important, especially for the long term plays. And those long term plays you shouldn't neglect, right? All right. What are the questions? I don't know if it did sound dumb. That's an answer to the question. All right, cool. Let me see. Let's go over averaging. We buy. Oh, how the EMAs changes as you change the time frame. Explain that to the people how it works. Definitely. Oh wait, what are the red and green? Okay, he's answered that. Volume, yeah. All right, hold on. I need a cough drop. Give me 1 sec. See, the cookies are not good, man. You need to eat the cough drops. All right. Yeah, it's getting cold out here now. All right, hold on. You pop the cough drop and then answer the question. What was the question again? Something about EMAs. Let me check it out. Whew. And you go over the EMAs, change. I should change time frame and explain that to people how it works. Yeah, that's a great question. Okay. So, this is the daily chart for Tesla, right? Up here, you can see the green line, orange line, red line. So, these three lines are EMAs. EMAs stand for exponential moving averages. So, this is part of technical analysis, right? It's the green line is a 9-day moving average. The orange line is a 21-day moving average. The red line is a 50-day moving average. So what that means is whether it's 9 days, 21 days, or 50 days, right now it's showing me the average price over 9 days, average price over 21 days, average price over 50 days, right? And all you need to know with this is if you go to the 4-hour chart, it will change. So it's the average 4-hour price. Sorry, average price over 4-hour periods over 9 days, average price of over 4-hour periods during 21 days, and then the red one for 50 days. So all of this, the closer you are to one, the closer you are to today. So if you have a 9-day moving average, right, it's going to be closer to the price action than the 50-day moving average because this is taking the price over 50 days, right? This is taking the price over 9 days. So if you want something which is a bit more volatile and more reactive to recent current prices, you want to look at this. If you want something which is a bit smoother, you want to look at the lower moving averages. Sorry, higher moving averages, which will appear lower under the price action. Now, the reason people use this is to produce buying signals, selling signals. For example, I might look at this price here and see it falling and holding above the moving average, right? And I might look at this and say, okay, could price drop below now? Sell signal? Could price push above? I see the moving averages pointed to the upside, diverging, moving away from each other. I might look at that and say, you know what? I think this looks good for a call, but I might not get in because I'm not sure because it could also drop. The next day it gaps up, fine, no problem. Now I'm like, okay, well, we're above all the moving averages. There's been no crossovers to the downside. There was a crossover to the upside over here. There's been no crossovers to the downside. They're all diverging. And this looks good. I might say, you know what, I'm going to get, which is what I did, by the way. I'm going to get a call for, 2, 3, 4 days out. Sorry, 2, 3, 4 weeks out in expectation that the stock runs for the next 3, 4, 5 days. Let me give you a good example. Better example. All right, right here. This is QQQ, right? Here we dropped. We were looking bearish, but we held above the moving averages. The price held above the 50-day average for QQQ. So it's not a problem, right? It's still holding above the good average. Now it started to uptrend. I'm thinking, all right, could this be something? It breaks above the moving averages. Here they did not cross to the downside. If they crossed to the downside, sometimes it could be looked at as a bearish signal. They didn't cross, they diverged, and we saw the stock continue rallying. Now, when I look at these three moving averages, it looks like they're going to continue up, right? All three continue up, which means I think the price action will continue more up than down. Again, we're going to be more bullish than bearish. We might pull back a little bit, which is fine, which is what we did last week. We pulled back to 502. That's fine. But eventually, we're still in a bullish trend. A day later, 2 days later, 3 days later, 4 days later, this week, what happens? We're back up to 515. Now, do I think that we should just buy calls and just run it up to 540, 550? No. Do I think price could come down a little bit? Yes. Which is why today I took put options and why I told you it's a scalp trade. Reason being, price tends to come back towards the moving average a lot, right? Here we consolidated before we broke out. Price came back to the moving average an hour later. So what did I say? All right. We break out, we're expected to come back to moving averages. That's why it could be a good idea to look at put options just until we come back to moving average before we start trading again. It's like any kind of stock. Pushes up, it's going to cool off a little bit before it makes the next leg up. It always happens, right? So pretty much what you want to do is, it's quite straightforward, right? You want to just look at the price, well, at least for me, you want to look at the price action in regards to the moving average on a larger time frame to kind of get an idea, an indication of what the trend is, bullish, bearish, whatever it is, right? Clearly bullish, that all the moving averages are pointing upwards. If we look at ExxonMobil, here's a bit more complicated, right? Here's where it gets a bit more tricky. Here, the green line, let me remove that for you. Here, the green line, the orange line, and the red line are crossing to the downside, right? You're like, oh, this doesn't look good, right? Here, when they cross to the upside, it looked good. Now, crossing to the downside, it doesn't look good. It looks bearish for Exxon, right? But again, you want to make sure that price, no matter where you're trading it, right? No matter where you're trading it, you make sure you understand that price tends to come back to the moving average. No matter if it's bearish or bullish, it tends to come back to the moving average, right? Here we were bearish, came back to the moving average. Here we were bullish, came back to the moving average. Unless there's some dramatic events, like with UPST, even in fact, no, UPST isn't even bad. Let's go with what gap? SMCI. Let's try that. Not even. I know which did die. There we go. So Target. I know I bring up this crusty Target earnings, but look, when price dropped below the moving average, it starts uptrending towards it again. It always does. It's always going to do that. So yeah, that's how I use the moving average. That's why you might see some of my plays like that. It's just natural. That's how price action works. But that's a great question though. I hope that does explain it. But if you want more in-depth detail, just ask me. I'll do it again. Volume of the trade. Okay. Okay, good. That's answered. Well, yeah, volume. When a stock has volume, it can pick up momentum. That's where supply and demand comes into play. I don't trade supply and demand, but if you were to trade supply and demand, what did we just look at QQQ, right? And Mr. Miyagi kind of mentioned this earlier. This right here, let's really look at it, right? This right here would be what's known as a supply zone. Oh my gosh. Right? Where there's more sellers than there are buyers, which means it could come back down, right? But then, at the same time, if you were to look here, and remember, these are just me drawing it, so it could look a bit different when you use actual supply and demand indicators. These right here could be demand zones, where there's a lot of people wanting to buy up the stock, and then it tends to ride up. As you guys probably know from economics, supply, when there's more people that want to sell than buy, that's supply. When there's more people that want to buy than sell, that's demand. The price will go up. Demand will be down here, supply will be up there. That's similar stuff, right? Similar stuff to volume. When there's nobody buying, nobody selling it, your spreads are horrible. When there's a lot of people buying it, it's going to probably start up riding up, especially when they're buying calls. And there's a lot of people selling it, it's probably going to start dropping down. That comes from volume. It also takes into consideration the kind of stock you're trading. If you're trading a well-known stock, indicator, that kind of stuff, sure. If you're trading, what was it? What was this weird stock somebody put out the other day? Was it KPG or something? Nah, I can't remember. But if you're trading something which is not well traded or not often traded, then you're gonna have those kind of stocks doing a lot of weird stuff. We're having wide spreads. It's gonna be harder for you to get in and out of a trade. That kind of stuff. You want to get something that's actually got some volume on, to make sure the stock price moves. Not a bad question. It's kind of a try and tricky. Okay, yeah. And who asked that? Not sure who asked it, but either way. Oh wait, it's forwarded, so I should be able to take me to the message, right? Oh, okay. Yasmin asked that. Right, cool. So, her question: is this a spinning top? And if it were red, would that have signaled more downside? What's that? Okay, so I'm not sure what a spinning top is, but like Juice said, it's an inside day. So, is there anything that has an inside day out here? Actually, no, wait. She put a stock up, didn't she? Oh. Where was the inside day on SPY? Okay, here. Right, nice. So I'm gonna highlight the inside day for you guys. Okay. So first and foremost, what is an inside day? You probably heard it a lot. Right here, okay? I'm gonna zoom in for you guys too. So only look at these two candles, right? The red one and the green one, okay? Wow. Okay, this red candle, this green candle, that's all you need to look at for inside day. So again, this is technical analysis. It's a pattern that we look at, price pattern that we look at. So this day was a big day where stock price moved up and down quite a large amount. The sellers won in the end, and it ended as a red day. So again, this is a daily candle. This is a daily chart. Each candle represents the price action within 1 day of stock trading. The wicks are where price reached during the day. The body is where price closed. Now, this green candle, the following day, so Monday, after the Friday, the Monday, as you can see, the body of the candle is within the body of the red candle, right? The previous day's candle. So what that means is the high and the low are within the high and the low of the previous day. So what this means what this can mean, let's say, is sometimes it could be consolidation. Sometimes it could be we're waiting for a breakout. Sometimes it could mean there's indecision. So we could see a couple more of those, which again is consolidation. But the way people use this, right, is if they see an inside day like this, a candle inside the previous candle, right, they might consider the high of the previous day, like where we closed, a price target for that day. They might consider the low a price target to the downside during that day. Some might see it as a possibility to break out, which it usually is. It's like some people who trade it. I'd say the most well-known idea of an inside day is to trade it to the upside as a breakout strategy. Some people will just trade it. Some people will see this and just get calls automatically. That is a strategy as well. But more that the aim is to understand that price has been pushed down, let's call it squashed down, and potentially ready to break out. It can also consolidate, but normally it has potential to break out from where we are. Again, on this day, so Monday, 18th of November, if you see that we're going to close inside day, Tuesday you might trade calls with your attempt to trade it up to the 589 or the five or downside 585, depending on what the price action of this candle that we're inside, right? So the thing you need to know about this inside day is the range is completely in or inside the body of the previous candle. Again, that means it could be time for a breakout. Sometimes it could be not like this is the kind of thing about inside days. Again, sometimes it could be consolidation. So if you're trading SPY or QQQ, you might need to give yourself enough time to expiry because it could be consolidation. But you also want to know that it has, I'd say, more often than not, potential to break out, right? So the best way to use inside days, I would say, because there are a lot of inside days. This is not rare. There are a lot of inside days on different charts, right? It can happen like 4 times in a month. It can happen more than that in a month, right? What you want to just know is you can combine this with actual other strategies. So for me, I would say inside day, holding above the moving averages, right? I might even zoom out and say, you know what? I might say it's also holding above my resistance here, rest you see, and I'll be like, okay, that could be a good indicator for calls because it's holding above the moving averages. That's one thing I'm looking for. It's holding above the previous resistance. It's coming a new level of support. This could be a nice entry for calls, right? That's one way to use it. Another way to use it might be like, okay, let me wait inside day. Let me wait to see, set an alert for a price when it breaks above, the wicks of the day that we're inside. When it breaks above that level, I take calls up to wherever. There's different ways you could take inside days. You could even short a stock based on inside days. It's a lot of ways you could use it. But the main idea is people like it because not because it's going to bring you crazy profit, right? Not because this is going to happen. Like that was more by chance, but more because of this, the potential for breakout, right? Because look, Monday we were here, Tuesday short slightly above, Wednesday we didn't really do nothing, but eventually we took up. So somebody that gets in Tuesday might think, okay, well that was a great day. I'm gonna hold till tomorrow. Wednesday they don't see no price action. They'll be like, okay, you know what? Even though you got the Dragonfly Doji, you might be like, okay, you know what? I've got my profit here. We closed at 588. Now we're at 590. I'm gonna take my profit here and sell out. Very few people use inside days. I'll be honest. They might tell you they are, but they're lying. Most people just use inside days to get this profit here, right? This profit up to 590, up to 591. Very few people use this inside day to get this kind of move, the $10, $12 move from here. People are not using it for that. The inside day, here you go. Let's see. Friday. What time frame though? But which daily? Yeah. But, but I mean, wait, that was a zero DTE though. You said that was zero DTE? Yeah, okay, yeah. Which makes sense. Which makes sense. Yep. Yep. Yeah. 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 Exactly. Exactly this. Exactly. Exactly. There we go. Mhm. It's not exactly. Exactly. So like here we got consolidation and an inside day calls, right? On another day, hold on, let me zoom out. Let me see if I see anything else here. Not really. Yeah, consolidation. Boom. Look at that. See? That's the one there. Right there. Consolidation. That's Yasmin, that's exactly what we talk about. Consolidation before a breakout. Right there. And most people are taking, if they are taking this trade, they're taking it to somewhere here. They ain't taking it all the way to here, most likely. They're taking it somewhere here. Because it could be a potential reversal as well. That's how they trade it inside there. You know? Exactly. Most people's not taking it all the way to 160 like that. That's they probably taking it up to here, 157, 158. That's where they're taking it. So yeah, that's a good couple inside days there for good examples. Yeah. Continuation, yeah. Okay. Mm-hmm. Yeah. 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 No. Because yeah, for example, if you took this trade, cool, you took it up to here, fine. I know price is going to come back here for a little bit, then I might take my call. I am not going to personally get calls here just because it's an inside day. If you still up under the moving averages, because we could consolidate all the way to here, to Wednesday, 4th of December, and then drop, or we could break out. But I'm not going to get it for me personally until it's up above the moving average and it come back to test it and then next leg up. That's my personal, um, strategy. But yeah, Yasmin, we don't personally just like inside a day like that. We just like to use it in as an indication of something to find in a stock or in a price action. Frankie said, "Did you guys go over UPST?" So we didn't, but I can do it. But I do want more generic questions, not really like I don't want to treat it as like a watch list session, let's say. But I don't mind going over UPST because it has a good lesson in there, I'd say. So, do you have any? Do you mean? Wait. Do you just mean why I took the call out, or are you talking about the UPST news overall, or what? Either way, I'll just start talking and you can let me know. So there's an analyst, I'm not sure who he works for, but he downgraded UPST from basically from neutral to a sell. So like, how I did my 2025 watch list, for stocks, and I said this is a buy, this is a hold, blah blah. He basically said UPST is a sell. Like if you got it and you could get out now, get out now. I think I don't know how many people know about UPST, but it basically a software to help companies with like fraud detection, risk management, like security aspects, right? But this guy said basically that the AI technology they're using, I believe. Oh wait, it might be under here. No, it's not here. But he basically said that the AI technology they're using, or the AI whatever they're using, is too expensive and it's gonna mess with their numbers. Basically, that's basically what the guy said. I forgot what his name was. So yeah, he basically downgraded their price target. So let's say people were thinking UPST is a stock which is worth $80. Let's say he said, "Nah, this stock isn't worth more than $65, and here's why." And he gave his reasons behind it. And people started selling shares. Oftentimes you'll see those kind of things. And I told the guys earlier, each reaction is an overreaction whenever news come out. There's no reason that a stock that is very consistently uptrending should drop 12% or 11%, oh, sorry, 15% in a day. There's no reason that should happen. It could drop 3, 4, 5%. I don't mind that. 15% is an overreaction. So any reaction, as I said, is an overreaction. Okay. So that's kind of what happened with Upstart. again, this is a stock which I think, obviously, I don't know more than an analyst, but I don't think there's major issues with the stock. I won't be surprised to see it back at $85 in a couple months. Look at the chart. This is steady. This is consistent. I've got my lines there. I've had my lines there from look. I had my lines there from when we were trading under $36. So yeah, the guy gave it a downgrade from neutral to underweight. Yeah, that's it. That's it. So he said basically this isn't a powerful stock. That's basically it. Again, you can see all that kind of stuff on whatever the stuff I said before: CNBC, Yahoo Finance, the Motley Fool, Market Watch, all that kind of stuff. Let me see why I took the trade. Okay, yeah, why I took the trade. Purely because of what I just said. Each reaction is an overreaction when it comes to news. I know about Upstart stock. I told you, or I didn't buy it, but I've been telling you guys from it was under 36. It's got potential, right? It's a stock that works with huge companies when it comes to their security, when it comes to their technological risk, when it comes to all that kind of stuff, right? It's not a stock where I look at it and say, oh yeah, this should be puts. Nah, not a chance. No way. It's just a price downgrade. That's all it is. And he had the points to back it up. It ain't nothing. It's nothing crazy, right? This, for me, if we were talking about buys, holds, or sells, this is a buy at this level. For me personally, again, I don't know more than an analyst, but I do know about financial technology. I do know about AI. There's nothing that a company that's using AI to power its sources, nothing that they can't get back. If he thinks it's too expensive, cool. That doesn't matter. Again, why I took this is I think it's going to bounce right back. When I say this is a buy, that means people will buy at these prices. That means people will. We talk about supply and demand, right? I think this is a demand zone for UPST right here. I think this is where people say, oh, UPST at $67, I like this. People say, oh, the same UPST that was at $80 last week, less than a week ago, man, I don't care about a downgrade. I think this is where the banks or big institutions, hedge funds say, you know what? I like UPST shares at $67. I like it. That's what I'm seeing for the next few days. Now, of course, I might be wrong. I could be completely wrong. That's fine. But this is one of their biggest, if not their biggest loss during this year. There's a big loss here. There's big losses elsewhere. Maybe back here. No, that was last year. So that probably their biggest loss of this year. I'm willing to take a chance to the upside, right? And even if we don't get it this week, I wouldn't mind buying shares here. This stock is gonna, 2025 is gonna bounce back. It rallied after the elections. You see, it rallied after the elections. Went from $55 to $82. It rallied. They beat their last earnings as well just before the elections. It's a company where I look at it and I'm like, this is gonna bounce back, and I think it's gonna bounce back quickly. Fintech AI is a force to be reckoned with. So, yeah. I don't pay attention to downgrades and upgrades exactly. The only reason I pay attention to downgrades is so I can buy more shares of stuff that I like. Like I said, I had a line at $36. This was 4 months ago. I never bought it. I don't know why. I think I just missed it. I never bought it. Cool. Now you drop them to this price. I'm not missing it again. It's just an overreaction. And we're still holding above the moving average. And whoever that guy is who's shorting it, he probably just sold it. He probably sold his and then wanted everyone to sell theirs so he could buy some more as well. He's just greedy. That's my assumption. He might not be, but that's my assumption. A lot of them do that. It's like you go to the store and you say, you know what? Look at these, these nice shoes. They're terrible. Everybody, give them back. Leave them here. And then you go in sneaky the next day and be buying the shoes. That's what it's like. So yeah, they were downgraded. If I look into it more, I can tell you probably who the guy is and what, why his word holds so much weight, that kind of stuff. He probably works for a big bank or something like that, or a big hedge fund, something like that. Kramer needs to upgrade the place. I mean, can you do a quick sentence on CLSK? Sure, we did this earlier, but I'll do it again. we're moving with Bitcoin. My entry last week wasn't bad. We just got a bad pullback the day after entry. That's fine. I was still confident in the play. We've rallied since then, and I still think we've got potential to go back up to. My first price tag was 1538. We just tapped that today, but I think we've got potential to run up to 1590 again. I do think we got it. Can we average down with the same strike but different expiration date? No, that's a different play. It has to be the same expiration date, same strike price, same way, call or put. Average down is purely the same play. You can't buy, if you buy, let's say CLSK, if you buy a $50 call, 15.5 for the 16, you have three different legs, or three different strategies, sorry. You pretty much need to buy the exact same play you just bought, but for cheaper. That's average down. That's what I did. I just averaged down and I also diversified. So, that's it. Any other questions? I could talk trash too. I just ate a big full plate of fruit. Bob has never eaten fruit in his life. Can we average down? Oh, damn, they said no, quickly. No, all of them, no. You're talking about big brown grizzly bear with your big belly. What are you talking about? With your gut? Do some push-ups. Do some push-ups. You can't breathe with all that gut, bro. You run half a mile, you're heavily breathing. Heavily breathing. Bro, you run 200 meters, you panting like a dog. You panting with your big gut. You got more belly. You got pure belly. You got, you got, you got. That's what you sound when you run 1 minute on the treadmill, all breathing heavy, gut all out and all that, all sweaty. That's a cat. That's a lie. 20 minutes? You don't do 20 minutes. Go over. Yeah, of course you do. All that weight on your knee. Of course it's going to be messed up. Go over skating out of your trades as PTs are hit. Oh yeah, that's real simple. What was the play at QQQ today, right? Yeah, man, all that weight on his knee. Of course his knee's going to be hurting. Be carrying 350 pounds. Those little weak knees. You're not, bro, you're not. Come on now. Hold on, let me finish. Let me finish 5 minutes and then I'll finish you off. But so scaling out, right? Let's talk about scaling out. 15-minute chart, okay? So let's say I took nah wait. Yeah, today was the puts on this, right? And I didn't want to get in calls because my call entry was away before. I messed that one up already. So I didn't want to get in calls. Let me see. Let me remove this first. All right, cool. So I said I'm taking puts. I don't remember where it was. 5:14 something, right? It might have been 5 minutes I did it on. But you guys seen, I said I'm looking for 22 to 27% because I know QQ just pulling back to go higher, right? It's not going to drop, it ain't going to die, but it can pull back to go higher. So I said I'm buying 25 contracts. I sold 10 when it, pulled back somewhere here. What I saw was back-to-back red candles. Nice, I like it. Then when I get a green inside candle, I'm like, okay, hold on. We could be rising, right? Okay, here I'm going to sell 10 contracts. I sold 10 for about, I think, 35, 36%, something like that, which is more than what I bargained for. It rises again. That's fine. Sell off again. And I know, well, this low now is not as low as it's not making lower lows, right? It's making higher lows. All right, I'm cool to sell out the rest of my 10 contract or 15 contracts, whatever it was, and then I'm out. Because I know, I go to the higher time frames. I know QQQ is not going to die here. We've just been consolidating, going higher, reversal, doji reversal. Come on, man. QQQ is not going to fall. This is where people get tripped up. They say QQQ blowout. They say, yeah, puts, but only for the retest of the moving average, and then we're out. That's why I say scale out, right? So if I say in the chat, I'm scalping QQQ puts, that's like 25, 30%, maybe 35, right? When it hits that, there is no messing around. There's not I'm holding for more. There's no You going in there with a plan. You sailing out because you taking your money, you taking your profit. I think for me it was about 300, 400, something like that, and then I'm out. If I get another chance, then I'm out fully. That's scaling up. That's all it is, yeah. And the reason we have price hugs is because, like I said today, QQ, right? We went to 514, what, 70? And I said, all right, well, my price target is 514 and we're coming back to 514. We went lower than that. So I scaled out around 514, maybe a bit less, right? 513 something, near where the candle closed. We start rising again. Cool. 5 minutes, there you go, sorry. I went out 514 something. I didn't go all the way down here, but 513 is probably 90, somewhere there. We rise again. We come back to test the 514. We get close to it. I'm out. That's all it is, scaling out. That's really it. Right. I think this is go for it. Yeah. Because that's not my entry. I said to myself, so were you here last week when I took QQQ calls and I said I'm going to 509, 511 and stuff, and we didn't quite get there? We sold off. Well, when it got to sorry, four, let me go to 4 hour. When it got to these prices was last week, right? 505, 503, we started rallying again. If I'm gonna get calls, it's gotta be somewhere here. Before the pop. If I'm getting after the pop, I know that pullback's gonna get eaten up, but I know that once the pop has already happened, I've missed my big move. My move, this is my move. That's my move from 509 to 515. I had multiple chances to get in today at 511, 512. I didn't. That's just how the mind works. I didn't. I knew I could have got in. I didn't. Let me do something else. Instead of let me just sit out, let me just take let me take the pullback. Because I don't know how much it's going to pull back, but I do know it's going to pull back, if that makes sense. I'm just taking what I like because I know I missed my real big move. So I'm going to take something different. I could have took a different stock, but I just chose to take a different play on the same stock, if that makes sense. What else you want? This one, 510, and then the 515 resistance. What, the bounce from today or like overall? Yeah. Where we got down to before. Yeah. I was not. I mean, I knew it was calls, right? I said it at the beginning of the day, but I'm not gonna. I personally, I'm not gonna get in when the jump already happened. That's fine. I'll just scalp the puts. That's what I want to trade. I'm not gonna. If something is up 100, 200, 300%, I'm not gonna get in. I'll take the when it drops down a little bit. I just don't know how much further it's gonna go in the moment, right? Any other question? I think you guys came with through a good question still. If you're a newbie and you don't know again about Greeks and stuff, just get the option pack. And if you still don't understand, then I'll do a pure session on Greeks. That's cool. Mm, yeah, that's very good. That's very. That's a great. Straight up. Great point. You're very yeah. You're no, you're very correct with that. Because I've got my charts. Like I showed you guys, UPST. UPST I had marked out for what? A year? That's fine. But if your chart ain't marked out, you don't know when to, sell, buy, anything. You need to know that too. All right. Let me eat this cookie. If any more questions, you've got about 1 minute left, and then I'm gonna finish this cookie off, and then you know what it is. Could we possibly backtest one, two trades? We kind of did that with it. Hmm. Hmm. Yeah, they heard that you wanted to do what do you call it, session, not session, pull up their charts, and they're like, nah, 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 nah. They're like, nah, 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 we don't do that here. Get that out of the chat now. What is that? All right. And with that, guys, I need to go and order some food. But thank you to those who came in. Thank you to all of you guys who showed up. Thank you to YouTube for watching this as well. For those of you in the Discord, this is going to be live on YouTube. Sorry, uploaded to YouTube. So yeah, thank you guys. If you enjoyed it, just say thanks in the chat. Peace.